Can you hear me now? You can hear me? Okay. All right. Let's start this again. Okay, so good evening, everyone. Welcome back. Today is Sunday, July the 23rd, 2023. We're going to talk about some trading psychology, some best practices, and we're going to talk about fib retracements, do a little bit of a market review. All right, so it looks like somebody else is joining us here. All righty. So as always, the disclaimer, this is for educational purposes only. Do your own due diligence, make wise decisions. Don't get scammed out there. Just be careful, trade well, follow your plan, etc. Right? We'll talk about some of these things here in just a second. So this is my bio. Most of you already know who I am, so I'm just going to skip over this. Don't think that anybody needs to go through this again. If you want to pause the slide, great. If not, who cares? So why do you want to be a trader? Why am I starting off with this? The reason I'm starting off with this is because there are going to be times in your trading career, or maybe there have been times already, where you've thought about quitting, right? And, maybe you're tired, maybe you're frustrated, maybe things just aren't working out the way you had hoped. Maybe you're making money and you're giving it back. There's a list of reasons why, you may want to take a break or even stop trading. And ultimately for some people, I'll be totally honest, maybe trading is not going to be for them, right? Not everybody will end up making it as a trader for a variety of reasons. Number one, it takes work, a lot of work. It takes time, it takes dedication, it takes focus, it takes discipline, and it takes a drive to succeed because it's you versus yourself as a trader, right? Some of us trade because, we want money. Some of us trade because we want freedom, whether it's geo freedom, whether it's time freedom. Maybe we don't want to work at our jobs anymore. Maybe we think it's prestigious, whatever the case might be. The reason why this sort of came up is I was reading about Novak Djokovic, right? Novak, the Joker, is probably one of the greatest tennis players of all time, if not the greatest. And there was a point in his career where I believe he was ranked third in the world, and he was thinking about quitting. Like, he just wasn't sure that he'd be able to get any further. And his coach basically said to him, why did you start playing tennis? What's your drive? Like when you were a child, what was your favorite toy? And he said, it was a tennis racket and a ball. And, everywhere I'd go, I'd just, be hitting this ball, whether it's off the wall or off whatever. And, he was able to reconnect with his passion and his joy and his desire to be a tennis player. And then after that, he went on one of the best, streaks in professional sports. He won a whole bunch of Grand Slams. He won like, I don't know, 100 and something matches in a row, won his first Wimbledon, and the rest is history from there. And so, how far are some of us from, the run of a lifetime? Well, you could be just around the corner from it. The question is, how do you get yourself there? How do you, change gears? How do you get yourself to the next level? And, I'm not going to give you some like magic formula or some magic secret. I'm just going to tell you that you have to put in the work. Most of you already know this. Most of you, who have heard me before, who have, maybe been part of my room in the past, you'll know that I am a big advocate for putting in the time, putting in the work, having a repeatable process, because if you have a repeatable process, you're going to have predictable outcomes. And that's really what it boils down to, right? So, if you've seen this before, bear with me. If you haven't, let's see if we can get some value out of this. So here's a question. You find $100 on the ground. you get a check. Maybe you've got some dividend paying stocks, you got a check. Your grandmother, God bless her soul, sends you $100 for your birthday. Maybe you had some old Pokemon cards. Maybe I'm dating myself and how old I am, but Pokemon cards were a big thing when I was growing up. And maybe you sold some of those for $100. Maybe you go to work and you get paid, you make $100. What's the difference? What's the actual difference when it comes to your bank account or when you go to the store? How you made that $100 doesn't really matter. So why am I saying this? Because there are a plethora of ways for you to make money in the markets. You could sell a covered call. You could buy a penny stock. You could sell put credit spread. You could buy a call. You could sell a naked option. Don't ever do that. Please, 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 please. This is just an example. You could trade futures. You could trade Forex. You could trade options on futures. You could trade crypto. It doesn't matter. Many traders seem to get it in their minds that there's one way to trade. There are a million different ways that you could trade, whether it's a different time frame, whether it's a different security, whether it's a different setup. At the end of the day, you're looking to make money. And if you're looking to make money, why not do that, or why not take the easiest approach for you, your account, your personality type, your schedule, etc. Because if you're working a 9 to 5, or maybe you're working a 12 a.m. to 8 a.m. shift, right? Some people work night shifts. Whatever the case might be, if you're working, can you really be trading off of a 1-minute chart or a 5-minute chart or even a 15-minute chart, right? Some of us in the room, they check their charts in the morning, they put through a few trades, and then they'll go ahead and, go on with the rest of their day. You'll find that the more time you spend in front of the screen trying to trade, the more opportunities you will see. But remember, every opportunity is not going to be a winning trade. And you don't have to take every single opportunity out there. If you were a surfer, you would try and ride whatever waves you could, right? And you wouldn't get upset about the waves that you missed. Well, it's the same thing with trading. We want to be able to focus and take the best setups that we possibly can, and then try and stay in that trade for, based on our plan. And, last week I was pretty guilty of this, not sticking with it. I had a lot of stuff on the go, and I'll talk about, things to watch out for later in this presentation. But really, at the end of the day, what we want to do is try and be as consistent as possible. And so as traders, we really need to focus on what we do best, what is going to help us make money based on our unique circumstances. If you can sit in front of the screen all day, that's fine. Doesn't necessarily mean that you're going to make more money. In fact, a lot of the people who I work with in the beginning, they start off and they're over trading. Most newer traders, when they review their trades, assuming they do, that's important to do, and we'll talk about that. Most of them are over trading. Now, there could be a bunch of reasons for that, but I can tell you this. I do not know very many real professional traders. I'm talking traders who are trading real money and that are making real profits. I don't know very many of them that are trading off of a 1-minute chart or a 5-minute chart, unless they're trading, futures. And, if you've got 5, 10, 15, 20, ES contracts or NQ contracts, you can trade a 1-minute chart and you can still make a killing. The reality is that most traders are not doing that. Most traders are not even trading, 5 lots on the NQ or 10 lots on the NQ. So be careful what you think you see out there. And keep in mind that there are a lot of professional traders that will trade only one setup. If you want to be a master, you have to master the basics. And so if you only traded one setup, could be the TTM squeeze, Maybe you're only taking long setups. Maybe you're only trading the daily chart. You'll find over time what works best for you. But if you find yourself trying to trade a whole bunch of different setups, you're not really doing yourself any favors, especially if you're not taking the time and putting the effort to track your trades and to review your trades. For those of you that trade the strat, you'll know that you'll see a 2-1-2, a 2-2, a 3-1-2, a whole bunch of different setups. Well, pick one for the time being. Focus on just getting really good at that one setup. You don't have to take that many trades. You can make an absolute killing trading one ticker on one time frame, one setup, a few times even a month if you have some, decent size behind it. So the idea here is you want to make money and you want to focus on what you're most comfortable with and what you're best at, okay? You can take 1,000 different systems, and if you give it to somebody who is not a disciplined trader, assuming that the system works and that you have an exploitable edge, you can give the best system in the world to a bad trader and they won't be able to trade it well. But you can take an okay system and you can give it to a good trader and they'll be able to make money over time. Remember, we're thinking about the next 1,000 trades. When we start thinking about the next 1,000 trades, all of a sudden, the edge comes off of that next trade. That next trade really isn't that important over the next 1,000 trades, right? We attach too much importance to this next trade that we're about to take. And while, of course, it is important because you have risk capital on the line, you've also got, your mental capital, your emotional capital, etc. But that one trade should be able to change your situation, but it shouldn't put you in a place where, you blow up your account or you face financial ruin. So do what is best for you to make money. So how do we overcome some of these psychological issues? Trading is probably like 10% technical. You could learn the basics of the TTM squeeze or the strat or Elliott wave or, maybe some other systems. ICT apparently is pretty complicated. I don't know. I don't trade it. I don't know much about it. But, overall, in the grand scheme of things, trading itself is probably about 10% of it. The remaining 90% is that psychological aspect, the risk management, the trade management, etc. And it can take you years for you to get yourself out of your own way. There's a gentleman named John Boyk. If you don't know who he is, he's part of the IBD community, right? So Investors Business Daily, William O'Neill, for those of you who know who that is, he passed away a few months ago now. Well, this gentleman, John Boyk, he's written a few books and he's currently doing a really in-depth study into the traits of the best traders throughout history, right? So, he'll cover 1 decade at a time, etc. And for most of those traders, they finally started to see improvement after their 6th year as a trader. So if you haven't been trading for 6 years, now it doesn't mean that you have to put in 6 years. There are traders out there who will trade for 2 years and they'll be really good at it. There'll be traders out there who have been trading for 20 years and they'll still have a lot of room for improvement, right? So it could take years for you to get yourself out of your own way. Paper trading can be great if you're learning the system, right? Or maybe you're trying some ideas. But until you actually have real skin in the game, it's not going to benefit you, right? If you open a new platform and you have no idea how to buy or sell, or you have no idea how to set things up, sure, use a demo account, right? If you are, if you want to maybe get into futures, something like a Top Step account or an Apex or My Funded Futures or whoever, those have benefit to them, right? They help you to learn what you need to learn without risking real money. right? And this is the most important thing, if you start off with a small account, now I'm talking about trading real money, even if it's $500, $1,000, and you earn the right to trade bigger size, you will find that you become more comfortable as a trader. For those of you that haven't read Mastering the Trade by John Carter, I highly recommend that you do so. I learned a great deal from John Carter, about the psychological aspect and, just how to be a better trader, right? I wouldn't have the success I've had in trading had it not been for him. And I have absolutely no problem saying that, I learned from this person or I learned from that person. So, check out his book. The first couple of chapters, there's one story in particular that he talks about, or he tells often, is, he used to start with a 10K account and he'd grow it up to 100K, right, over time. And then something would happen and he would blow up that account and he'd be back down to 10K. Well, that's a psychological plateau that we reach, right? Some of us will be very comfortable trading maybe one contract. If you're trading futures, maybe you're trading one ES contract or NQ contract. If you're trading options, maybe you're comfortable just trading one or two contracts. Maybe you're comfortable trading a certain position size. And you'll find that, once you start to see some decent results, of course, then you have to step up your game. Well, you don't have to. There's nothing wrong with staying where you are. But, if you want to start growing your account or maybe start, earning the right to trade some bigger size, maybe you go from 1 to 2 contracts, you go to maybe 2 to 3 contracts, to 4 to 5, to 7 to 10. You can get to a point where you're trading 100 contracts and it's, normal. But that takes time. And if you're not ready for it, it can actually be a recipe for disaster, right? So if you're panicking while you're in a trade, chances are you have too much size on. So, simply think about reducing your position size to something that you're comfortable with. You might be absolutely fine with trading a $500 contract or having a $500 position size. But then if you try and trade a $2,000 position size, maybe you can't sleep at night. Well, there's a very simple solution to that, right? Focus on what works for you and what works best for you, because all we're trying to do is put the odds in our favor, right? So whether it's trading less, trading smaller, being more selective with our trades, because really at the end of the day, you're looking for longevity. I've been around for a long time. There are traders who are here today that weren't here last year, that won't be here next year, right? I was around, I've been in the industry since even before the financial crisis. So I've seen, a lot of things, a lot of people, a lot of groups, a lot of ideas, a lot of, kind of what's hot in the market. I've seen a lot of those fads, come, pass, fade away, and, some cases completely forgotten. But I'm still here. I'm still here because I never gave up. I'm still here because it took me a lot longer than it probably should have, but eventually I did realize the importance of just doing the same thing over and over again and getting myself out of my own way and not to overcomplicate things, right? Simple is best. You don't need 15 indicators on your chart. I've got maybe 3 or 4. I use them. They all mean something to me. But over time, I've stripped away a lot of things simply because, when I go back and I look at it, it just didn't have the value that it once did. Or maybe I myself have changed as a trader. Or maybe, and it's very possible that, your trading system, whatever it is that you're trading at the time, hasn't, or, it's not the best market conditions for that type of trading, right? So maybe you're a breakout trader, maybe you focus on volume, maybe look at volume profile, whatever the case might be. Some things can work all the time, right? The reason why I prefer trading the TTM squeeze is because, price is consolidating. And usually, regardless of whether VIX is 40, 20, 10, or less, I know that there's going to be movement in the underlying security, right? After a period of consolidation, we're going to see some sort of move, right? So there's plenty of trading opportunities. If you trade the strat, doesn't matter what time frame you're trading, you'll find setups. But what I suggest is finding what works best for you, your trading style, your personality, your schedule, your account size. What works for me might not work for you. There's some people who, still trade the strat. There's some people who trade the strat and ICT. There's some people who trade just the squeeze. Some people trade the squeeze and the strat. At the end of the day, if it's working for you, continue doing it. If it's not, before giving up, figure out why it's not working for you. Because hopping from system to system to system, or time frame to time frame to time frame, in short periods of time is not beneficial. Because, you could just have bad luck at that time and take 5 losses in a row. Does that mean that your system is bad? Does that mean that, maybe the issue was with you and you were maybe rushing into your trades? You weren't following your plan. Maybe you didn't have a plan, but you need to review. You need to go back and you need to figure out what you did, why you did it, what went well, what went wrong, and what can be improved on. Because whatever you measure, you can improve. But if you're not doing that work, it's going to be very difficult for you as a trader, especially if you want to stay in the game for a long time, business for a long time. Right. So the idea, this is from Atomic Habits. I highly recommend everybody reads this book. Even if you're not a trader, it's a fantastic book on just, helping to build good habits, replace, those old habits with newer habits. And if you improve 1% every day, right? 1% better every day over, a year, you can be almost 37, 38 times better. But if you get worse every day, and in trading, if you're bad every single day, eventually you're just going to be at 0. And you're going to be blowing up your account and then figuring out what to do next. So small improvements can have really big results. In fact, if you think about it, if you were to eliminate or at least significantly reduce the biggest trading mistake that you're making right now, how much better would your trading be? Just, take a moment and think about it. Think about the last few trades that went wrong. Was it because you put on too much size? You were impatient? What happened? So ask yourself, what went wrong? What can you improve on? Because if you're not going back and reviewing not only your winning trades, but your losing trades, well, your losing trades and your winning trades, I should say, how will you know what to focus on for the next time, right? Which is the reason why our trades need to be like a recipe. If we follow the recipe every single time, we're pretty certain as to what the results should be. Now, of course, the market is the market. We have systematic risk, which is always there. So whether you're holding a T-bill or whether you're holding a bond or whether you're holding an option, whether you're trading futures or Forex or crypto, market risk is always there, right? That systematic risk is always there. As long as you're in the market, you're taking on some risk, right? And you need to prepare for that, which is why we properly position size, which is why we, make sure that, we're being responsible as traders. And we always have to remember and go back to those 5 fundamental truths of trading. If you haven't read Trading in the Zone, don't take another trade until you read Trading in the Zone, right? Obviously, that's not financial advice, but I'm serious. Like, make sure that you've gone through it. And if you've gone through it once, well, that's not enough. Go through it another 5 times. I kid you not, there was one or two chapters that I listened to probably 10, 12 times in a row. I go through my audiobooks on a regular basis, right? Whether it's Mastering the Trade, whether it's best loser wins, whether it's trading in the zone, whether it's atomic habits, whether it's the checklist manifesto, whatever the case might be. I go through it on a regular basis. Why? Because you need to stay sharp, right? And so you have to remember anything can happen, right? That's the number one thing. Like I have this sometimes as my background. I change between this and a pile of money, but the reason why I want it there is so that I can always see it, so that I'm always aware of it. Anything can happen. Well, if I know that anything can happen, should I be full porting? No. Should I be taking on even excessive position sizes? No. Should I be trying to trade, weekly options? If that's part of my plan, maybe. For most people, you're much better off buying more time on their trades, right? And sticking with those trades until you're either at your target or getting stopped out. And of course, it is easier said than done. And one thing that I really want to point out, right? We know that there's a random distribution between wins and losses. So if you win 60% of the time, now, if you go and you look at the stats of some of the best traders out there, I'm talking guys who are at Goldman Sachs making millions of dollars a year. They might win 70% of the time, might win 60% of the time. There are some traders out there that only win 30% of the time. Now imagine being wrong 7 out of 10 times. How many of our egos can actually take that? It's not that easy, right? And so because there's this random distribution between wins and losses for any given set of variables that define an edge, it's basically just saying, you know what? This next trade could be a winner or a loser. Sure, over 1,000 trades, if you win 70% of the time, you'll have 700 winning trades. But keep in mind, you're going to have 300 losing trades. And this is what a lot of traders do not really think about. What happens if you go on a losing streak? Over 1,000 trades, it's almost a statistical certainty that you will have 5, 6, 7, even 10 losing trades in a row. Over 1,000 trades. Now, because that's random, you could win, and then lose 3 in a row, 4 in a row, 5 in a row. Now, how much of those gains did you give back? Or you could lose, and then, by the time a really good setup comes around, you've got no money left in your account to trade with, right? So go through Mark Douglas's, book, The Disciplined Trader, Trading in the Zone. Fantastic. He's got those old videos on YouTube, which, I'll share the links for. Go through it, put in that time, right? Keep your blade sharp and always try and make sure that you're keeping an eye out for what you are doing, why you're doing it, and why you should continue to do it, or why you should prevent yourself from doing it, right? Getting yourself out of your own way. And, he says 95% of trading errors are likely to stem from your attitudes about being wrong, losing money, missing out, and leaving money on the table. Over the last 3 weeks, I have left a lot of money on the table. Probably close to 6 figures. You guys have seen my trades, right? My Riot trade, my NVIDIA trade, a couple of those other ones. Does it bother me? A little bit. Did I have a lot going on in my life and probably should have, maybe stepped aside or, cut my position size in half or whatever? Yeah. But how do I know this? Because I go back and I review it, right? The 4 trading fears, right? How many of us just don't want to be wrong? How many of us are worried about losing money? Well, if you know that you're going to win 7 out of 10 trades, or, and that's like if you're really, really good. Let's say you win 50-50, right? You win half of your trades. Well, if you know that you're a 50-50 trader, how are you not going into a trade with the anticipation or the expectation that the possibility exists of you taking a loss on that trade? Now, if you go into the trade not thinking that you're going to lose on the trade, because none of us go into a trade to lose money, but going into the trade knowing that the potential for taking a loss is there. How many perfectly good setups have we seen that fail? We saw it last week, right? I think Crowd was one of them. I think Snow was one of them. Just got absolutely decimated. It was a pretty good setup. Got crushed. It happens. Sometimes you'll take like a mediocre trade, right? It's not an A+ setup. It might be like, okay, yeah, the EMAs are kind of sloppy, but there's the squeeze, momentum's above 0, and then boom, out of nowhere, it turns into this like insane trade. You just never know. The only thing that we can do is make sure that we have the right ingredients and we follow the recipe, right? Missing out, we know we're going to miss out on trades, right? We could run a scan one night and come up with 30 different names. Can we take each one of those? Now, maybe 5 of those will just go absolutely ballistic and, meet your target the next day. Some of them might continue to chop around for a couple of days. A few of those perfectly good setups could fail. We just don't know. All we can do is put the odds in our favor and try and be as consistent as we can, which leads to not having a trading plan. Now, if you've worked with me, you have a trading plan. Period, end of story, right? Because that's a requirement. If you don't, you need to have a trading plan, right? This means that, when you don't have a trading plan, it basically means that you think that you know more than the market and that you are going to be right no matter what you do with your trade. Nobody knows what's going to happen in the market. Nobody. Not a single person. It's easy for us to go back in hindsight and say, did we know that was going there? Yeah, we did. Did we really? Because if we really knew that price was going to go from A to B, and we were 100% certain, everybody in trading a particular system would have all the money in the world. So how does that make sense? Nobody ever knows. We have an idea of what might happen, sure, but nobody knows the future. Because if they did, they would have all the money in the world, right? So think about that. And, think about how, if you wanted to go to a new restaurant or you wanted to go on vacation, you were driving somewhere or whatever, you wouldn't just hop into the car and start driving, right? You're going to have a GPS, you're going to use a map, but you have to have that trading plan, because if you don't, I can guarantee you that without a proper trading plan, your trading is going to be a lot more difficult. And for those of you that didn't have a trading plan and now do, can you attest to the fact that having a trading plan has helped with your trading? Right? Next, not reviewing your trades. This happens because, maybe we just don't want to accept responsibility of our trades. Maybe you don't want to put in the work that's required to improve your trading results. If you want to look absolutely jacked, or you want to look, or you want to be able to lift or bench 250 pounds, 300 pounds, whatever it might be, but you don't go to the gym and you don't lift any weights, how is it that you're going to be able to get those results? Now, if you look like you bench 250 pounds and you don't lift any weights, maybe you're on steroids, maybe you've got one of those bodysuits, but at the end of the day, if you haven't put in the results, if you haven't put in the work, you're not going to get those results, right? Which means that you're not being serious enough about your trading success. All of that stuff that we do, after we click buy and we click sell, all of that stuff outside of the time that we're in a trade is really where we get our edge. It's where we build our habits for success, right? So my suggestion, try grading each of your trades. Understand and realize and accept that there's work involved, right? Planes constantly need to adjust their course, right? A small deviation off of your flight path is easily corrected, right? Your trade journal is your flight path. Now, if you started flying in the wrong direction, it's going to take some time to get back on track. But if you're not doing that work, if you're not planning your trades beforehand, you guys have seen what my charts look like, right? I've got 5 lines on the chart. They're color coded. I know exactly why I'm getting in, where I'm getting in, what my contract is, what my stop is, what my target is, and what my contract expiry is. It's right there on my chart. Super easy. My entire trade plan is right there. I can take a screenshot, I can paste it into my, OneNote, and it's there. And then when I go back and I review it, I know exactly what the market looked like at the point where I took that trade. And for those of you that have worked with me and that started tracking your trades, how much did you see in terms of, insight into your trades, into why you were taking trades? How many times have you gone back and said, oh yeah, I shouldn't have taken that trade. That was a bad trade. But how do you know? You know because you put in that time and you put in that effort and you put in that work, right? If you're taking 10, 15, 20, 30 plus trades a day, it's pretty hard to track them properly, right? Most professional traders that I know are taking less than 5 trades a day. In fact, most of them are taking less than 3. But they've got one setup that they know, that they've mastered, that they use over and over and over again. So recognizing tilt, one of the most important things that we need to be aware of as traders is becoming euphoric, right? It doesn't matter whether you're trading with a $500 account or whether you're trading with a $500,000 account or trading with a $5 million account. The euphoria is worse than the fear. And so it's very important to have something in place to keep yourself grounded and humbled. I know a lot of professional traders that, they'll after trading, they'll go and do like jujitsu, right? And get thrown around by a master just to bring them back to reality, right? The market will always humble you when you're at your highest level of euphoria, because that's when you are the most reckless. It's happened to me, right? It's happened to me whether, you're making 5 figures a day for a couple of days and, maybe more than that. And now, you feel like you're invincible. And then you put way too much into a trade. And that's when the market reminds you who's really in charge. It happens. If it hasn't happened to you, believe me, it will. And it's actually worse than trading scared. So what do? Take some time away from trading, right? If I have a really good day, I might just call it a day because I don't need to continue to trade, because at that point now, right? Say you've made X amount of dollars. Well, now I'm risking that money because, I'm feeling like I'm on cloud 9 and I'm feeling, okay, you know what? Like, sure, I'm just going to take another trade because you're right, because you're right, because you're right. Could just be market conditions. How many traders started trading during the pandemic only to just get absolutely wrecked when we had a bear market in 2022? I've traded through the financial crisis. I've traded through, the Greek debt crisis, all sorts of other crises, all of the things that have happened. I've traded through them. I can tell you that if you let your emotions get in your way, whether it's fear or whether it's greed, you're not going to be able to last long term in this business. If you are too emotional, you have to figure out a way to get those emotions under control. So if you're making, decent money or you're happy with your success, before you get to the point where, you take your account from $500 to $2,500. I've seen it happen, with students who I do consultations with. They'll go from 500 to 2,500 and then just all of a sudden give half of it back in 1 or 2 trades. Well, what I suggest or recommend is withdrawing funds from your account. Pay yourself. You guys see me, I pay myself often. It helps because, if you grow your account, say you start off with I don't know, we'll make the numbers easy. You start off with a $10,000 account and you grow it up to 25,000. Why not take out 10? If you take out 10, now you're starting with 15. So you're starting with more than what you originally started with. And, maybe you're trying to build up your account and you're trying to build up your trading muscles. But then when you get to, say, 30, take out another 10. If you frequently pay yourself, you're keeping money out of your account, which is basically in the danger zone, right? If you're not a responsible trader, what is keeping you from putting half of your account or more into one trade? You got to be careful, right? So paying yourself is one of the easiest ways to, make the money real, keep you from taking on excessively large position sizes, and it helps you to realize that this can be something that is sustainable, right? You treat it like a hobby, it's going to pay you like a hobby. And most of our hobbies cost us money. But if you treat it like a business, it can pay you like a business, right? For those of you that have worked with me, or for those of you that were in my room when I was with CP Group, you saw how I used to trade, right? Start the account at 10K at the beginning of the week and withdraw whatever it is that I made, and then reset the account on Friday. So get into that habit, right? Because when you take money out of your account, that money becomes real. It's not just numbers on a screen. And it also helps keep you from becoming euphoric. We all love to grow our accounts. We all love to see the numbers get bigger and bigger and bigger. And then in 2 trades, you end up giving it all back, or half of it, or more, right? You don't want that to happen to you. So how do you scale up, right? It's important to earn the right to trade big. Scaling can be very difficult for some, right? You want to take it slow. If you try and bench press 250 pounds when you're fresh off the street, you're probably going to hurt yourself. If you're trading 1 NQ contract and you want to scale up to, 2, maybe try trading more micros, right? Instead of trading 1 NQ, because from 1 to 2 is a pretty big jump for some people. Go to 12 or 15 MNQs. Try that. It helps you incrementally increase your size and helps you get used to it, but keep in mind that it's going to take time, right? Now this one, I think I've seen a lot of questions about how to keep focus when you're in a drawdown, right? Many of us think about the next trade. And, the next trade is important because you're putting your risk capital on the line. But as I mentioned before, you want to start thinking about the next 10, 100, 1,000 trades. I mentioned this already, over 1,000 trades, there's almost a statistical certainty that you will lose 5 to 10 trades in a row. So what do we do first? Manage risk, right? Track your trades, journal them, and remember, anything can happen and the market doesn't give a damn what you think, right? This is the actual picture of this printout that I have beside me. I have it there because I need to constantly remind myself. I always have to remind myself that the market is always right. You are never, ever, ever going to win an argument against price, right? The price keeps going up. There's always a price that says that you're wrong. And if you just keep trying to short something that continues to go up, by the time you get that move that you're looking for, you might not have anything left to short with. Okay. Especially, part of the TTM squeeze system that we trade, the other half is, once it gets extended and we're looking for that reversion to the mean, right? It gets above +3 ATR. Well, there's a time and a place for that. Because if you just see something's +3 ATR and then you take a short and then it goes up the next day and you're like, oh, hey, I'm going to add to it. And then the next day you're going to add to it. Well, we've seen how it can stay +2, +3 ATR for sometimes a week or more. So you want to make sure that you have the right signals right? It could be a strat setup. It could be, you know, maybe there's a shooter. It could be, you know, maybe momentum has shifted. It could be anything, right? But make sure that you have that checklist and it makes sense why you're taking that trade, right? Because remember, at the end of the day, the market doesn't know who we are. The market doesn't care who we are. We're just a drop in the bucket. So how do we forge discipline and get rid of impulsiveness? So one of the most important things to do, always have a plan. For those of you that have listened to me before, I'm not telling you anything new. I'm telling you the same things over and over again, right? But there's a reason why, because we need to constantly remind ourselves that we are looking to be consistent. So always have a plan in place. Why are you getting into your trade? Why shouldn't you get in? Where's your stop? Where's your target? How are you going to manage your trade? Are you going to scale out? What are you going to do with your stop? Right? All of these things you need to know before you get into your trade. If you're in a trade and then you're wondering what you should be doing, 9 times out of 10, the best thing for you to probably do is get out of that trade. How many of us are actually going to do that? You want to get to the point where you're just not taking impulse trades. You want to just be able to have the discipline to simply have a plan. It takes time. It takes time. Because if you don't, then you're going to have problems, right? So no plan, no trade. Print that out, write it on a sticky note, put it on your monitor, set it as your background if you have to. No plan, no trade. And remember, if you're fishing and you don't catch a fish every single time you cast your line, are you going to get upset? You're a surfer. Do you get upset when you don't catch every single wave, right? As John Carter teaches, leave FOMO and learn JOMO, the joy of missing out. There's a lot of trades that you see that just completely take off. Those are always the ones that you wish you were in. There's always another trade, right? When we run a scan for what has a squeeze setup, or if you're trading the strat, what's got a hammer, what's got a shooter, right? There's probably a list of them. Well, are you going to be able to take every single trade? You can't. So what do? We just try and take the best looking trades, the A+ setups. Why? Because that helps us put the probabilities in our favor. Nothing's ever 100%, but what we do know is that if we stack the odds in our favor and we have a repeatable process, then we can have predictable outcomes, right? Knowing when to walk away, right? This is something that can be a real challenge for many. We have to learn to get ourselves out of our own way, and that involves time and effort, right? As the late, great Dr. Van Tharp says, if you don't have rules, everything you do is a mistake. So you have to set rules for yourself. If you don't have rules, you don't follow them, or they just suck, they need to be modified. But you won't know until you apply them, right? So track your trades, review your trades, see if the issue is with you or with your system. If it's with your system, okay. If it's with you, maybe there's some additional work that needs to be done. Many of you are good at taking suggestions, but there are a lot of traders out there that are just not coachable. They're just not coachable for whatever reason. Now, you can be coachable at times, you can be not coachable at times, but overall, you want to be willing to learn and willing to accept change. Because if you're not, it's going to be very difficult to be successful, right? Think about it. Phil Jackson coached both Jordan and Kobe. And without them being coachable, do we think that they would be at the level they were? They had phenomenal talent, but without being properly coached, maybe they wouldn't be where they are. And I find it really interesting that you look at professional athletes. What professional athlete do you know that doesn't have a coach? Executives have coaches, you know, athletes, professional athletes and traders have a lot in common, right? But why is it that all of the best ones have a coach? They're already the best, but why are they always looking to seek to improve? The reason is because they realize that somebody might be able to see something that they're not seeing, right? So, you know, make sure that you're coachable, make sure that you stay coachable. I've been at this for 2 decades and I still learn. I still buy books and read books. I still take classes because if there's somebody that knows something better than I do, I want to be able to learn. But you need to learn from the right people, right? So knowing when to walk away, very important. Knowing when not to trade. Now, this is really where I wanted to talk about because this is something that has, I won't say plagued me, but it's something that's really affected me over my trading career. And it's something that is much easier said than done, right? If you have a lot going on in your life, then there's nothing wrong with staying on the sidelines. And in fact, when I go back and I look at all of the times where I have not been trading well, it's usually because I have a lot going on in my personal life. There's nothing wrong with just staying in cash. The market's always going to be there, right? And if you're distracted, you won't trade well. I had puts on Riot, right? You guys remember, I I I won't say I called it, but I saw the setup in advance. I sold way too early, sold before my targets, right? Ran all the way up. God knows how much I left on the table there. And then I said, this is ready to come back down. What happened? I got stopped out. If I waited just, a little bit longer, I would have made a boatload of money. Nvidia, same thing. When I went back and I looked at my Nvidia trade, right? I sold when it was whatever, I had the 475 puts. I sold when it was, 465, and then I cut the rest, I think, when it was around 468, somewhere around there, right? And then it dropped and it dropped and it dropped and it dropped and it dropped. The contracts that I sold for like $17 got to like 30 something, right? Because Nvidia dropped to what, 440 something, went right to my target that I identified. But I didn't make the maximum amount. Now, keep in mind, you're never going to pick the absolute top and the absolute bottom. But why did I not stay in the trade? Well, for those of you that are in the room, you know why, right? I've got a lot going on in my personal life. And, I could have either stuck with it, I could have cut my position size, I could have just not traded. But the whole idea and the whole point here is that you need to be able to identify it and need to be able to say, okay, you know what? Hey, I'm going to take a step back, right? Now, in this situation, I just didn't make as much money as I could have. And if I would have, it would have been fantastic. But at the same time, if I was busy doing something where I couldn't be at the screen and the position went against me, what would my excuse have been then? So it's better as part of your pre-trade checklist, or, when you sit down on a Sunday evening and you kind of plan out what's going to happen, what's going on this week and what you've got going on. Maybe you've got work meetings, maybe you've got this, that, or the other thing. Take the time to identify, are there any times where I should not be trading? Believe me, missing out on opportunities is going to happen over and over and over and over again. You're going to miss out on more opportunities the longer you trade. It's fine. It happens. But what you want to prevent is being distracted and then taking loss after loss after loss, because then you create a downward spiral. Now you start to feel negative. Now it's like everything I touch, it's just not going well, right? And then what happens? It becomes a self-fulfilling prophecy. So take the time, take a step back, realize when it's best not to trade, and then come back to it. If you've taken a break from trading, trust me, some of the times when I've traded the absolute best is after taking a break. And if you've been away from trading for a while, then ease yourself back into it. Maybe in the beginning, take a few paper trades. There's nothing wrong with it. There's nothing wrong with, getting your legs back under you. Test the setup that you're going to be trading, get a feel for it, and then once you're ready, start small and then slowly build yourself up back to where you want to be. But don't be in a rush for anything. Remember, when it comes to trading, trying to go too fast usually ends up taking you longer. So be patient. There are strategies that you can put on. If you really, really, really want to trade and do something, you can sell premium, right? Sam, yeah, you just mentioned that. Jersey guy, yeah, that's why I like options. Yeah, set it and forget it, right? Some of the best trades that I've put on are trades where I have bought months of time and then just not looked at it. Because the more you look at it, it's like if you were driving in the car, say you wanted to drive from New York to Florida, and you get on the highway or the freeway or whatever you guys call it down there, and you start driving, you're not going to check your GPS every 2 seconds, right? If you know that it's going to take 15 hours, I don't know how long it takes, but if hypothetically it takes 15 hours to get there, that's like you trading on, say, the daily chart. Would you check it every 5 minutes or every 1 minute? Well, that's like checking the 1 minute chart and the 5 minute chart. It's not going to do you any good. So knowing when not to trade, very important. If you can't actively monitor your trades, there are other trades that you can do, right? Covered calls, the wheel strategy, selling puts. These are all things that you can consider if you still want to be, in the markets. There's a lot of strategies that you can do, especially when you understand options, right? And suggestions on staying focused, right? Sometimes the best thing to do is to scale down and to trade less. I still have this piece of paper here from when I heard it directly from John Carter. It said, trade smaller, trade better, trade less, make more money, right? Buy at the mean, the 21 EMA, sell plus 2 ATR, right? You'll see that often I sell when it gets to plus 2 ATR. Sure, trades like IONQ and ENVX and NVIDIA, Mara, Riot ran way past plus 2, plus 3 ATR. But I know that if I continue to focus on just the 21 with the squeeze, the plus 2 ATR or minus 2 ATR if it's a short trade, that I can be very consistent, right? Are you going to get stopped out? Yes, absolutely. After a while, getting stopped out is just the cost of doing business. As long as you're not risking too much per trade, right? And so scaling down, trading less, you would be surprised at how much better you trade when you trade less and when you have less capital on the line. Because oftentimes you're able to hold on to a position that maybe if you were trading 3 times, 5 times, 10 times the amount, you wouldn't be able to, right? If you normally bench press, I don't know, 150 pounds, and you try and bench 200, how many of those reps are you going to be able to do? If you go to 155, Okay, might be a little bit more difficult. If you drop down to 125, you're gonna be like, yeah, I could do this, no problem. You drop down to the 21, sorry, you drop down to 100 pounds when you normally bench 150. It's gonna be easy. You're like, yeah, I could do this all day. Jersey guys, so what's so meaningful about the 21 EMA? It's basically just the moving average, just like the 1 month, like approximately 21 trading days in a month. That normally acts as the mean. So if you're looking at Bollinger Bands, if you're looking at Keltner channels, they all have their basis as the 21 EMA. And so normally that's sort of the mean or the average over time. And you'll see that tickers will usually come to the 21 and usually go to +2 ATR and then come back. Now, there are times where it will take a long time for it to revert back to the 21. There are times where, it'll respect the 8 EMA, for example, and we've been kind of testing that. Yeah, around, give or take. Yeah, around. So, at the end of the day, really all we're looking for is being consistent and then trying to improve, right? Trying to improve. And we want to ask ourselves how important trading is to us and how much being successful matters. Having a plan in place, following your rules, if you can't do it on your own, find an accountability partner or a mentor, right? One of the reasons why we have this small group here is so that we can share with each other. We can learn from each other. We can, bounce ideas off of each other. We can reinforce each other and, empower each other and bring each other up, right? And so, the idea is you're not just going to hop in your car and start driving, right? Don't do the same thing with your trading. So learning discipline, right? Trying to automate things as much as possible. If you can, entering a bracket order is great, and then let the market do what it's supposed to do, right? If you have that available to you, you have no idea how valuable of a tool that is. And you can just walk away instead of sitting there and watching. And it's important to understand your time frame, right? I prefer the daily time frame. If I'm trading the daily time frame and then all of a sudden I find myself looking at like the 30-minute chart or the 15-minute chart, I know it's time to get up and do something else, right? If you're trading on a daily chart, you have no business watching a 5-minute chart. It brings you no additional benefit, and you're going to start to get in your own head, right? Because if you see 4, 5, 6 red candles in a row on a 5-minute chart, it might not even register on the daily chart. It might just show as a little tick. And then what's going to happen? You're going to start panicking. Oh my God, this is going to zero. My contracts are going to zero, right? Some traders will actually even turn off their P&L when they're trading, and they will just focus on the setup. Something that I've done, something that I probably should do more often now that I think about it. But you want to do as much as you can to make things as easy for you to succeed as possible, right? Why do we take the same setups over and over again? Because it becomes easy to identify. We know what the probable outcome is. And we know that over time, it works, right? As long as we put in the work. And so, if you're able to automate things, why do I put everything on my chart before I get into my trade? So that everything is right there. And I'm able to simply just look at it, know where I am, and then when I go back to review it, it makes it really easy. Now, some people have asked, do you need 10,000 hours to become a successful trader? What I'll tell you is it takes time and effort. You're not going to become a bazillionaire trading in 2 years. In fact, and let's be real here for a second, the vast majority of traders out there are not making millions of dollars a year. In fact, if you're making more than 100K a year as a trader, you're doing pretty well. Sure, you've got the few who are elite, right? You've got your You've got the people who excel. You've got people who have really big accounts, right? Somebody like John Carter, for him to make 10 million in a year is actually a bad year for him. But he still made $10 million, right? Now, if a good year for you is 20 million and a bad year for you is 10 million, well, that's the level that you are, right? Or the level that you're at. Yeah. And Sam, you're right. Most of them won't be around this time next year. Most of them won't be around a year from now, 2 years from now, 5 years from now, 10 years from now. I know. I've been around for 20 years. There are people who were around 20 years ago that had, back then there were a lot of like newsletters, right? I've got enough white hairs in my beard that I can, that I can remember reading the newspaper and stuff like that. But I mean, they're not around anymore. How many services or newsletters or things like that are here today, but are going to be gone next week, next month, next year, 5 years from now, 10 years from now, right? You hear me harping about percentages all the time because basic math just doesn't lie. If somebody tells you that they're making 10% on their account every single day, they're lying. To do that consistently, sure, 2, 3, 4, 10, 20 days in a row, sure, I'll believe it. But do you realize that at one point, like we're talking about exponential growth, right? I don't have that slide in here, but like it gets to the point where you simply won't be able to scale in such a way that you can make 10% on your account every single day, right? So market conditions, strategies, your life, they all factor in, right? A lot of people made money post-pandemic. The market was only going up. Market was choppy last year. We're doing well now, or at least we were. Last couple of days were choppy. So ask yourself, is your system suitable for all market conditions? Are you suited for all market conditions? I know some pro traders that if it's a bear market, they just don't participate. And you're like, well, why? Why don't you trade to the short side? It's like, look, if you made enough money on the long side, you can afford to sit out on the short side. Right? Sometimes no trade can be the best trade. Sometimes doing nothing is the best thing for you. Cash is also a position, especially now if you can just make 5, 6%, just holding cash. Remember that you don't have to trade all day, every day. How many people that I've worked with have I told you to trade less? Probably every one of you. Why? Because you get to the point where you realize, hey, if I have a couple of good trades a week or a month, that's all I need, right? So what are some practical methods for building discipline? Here's a list, right? Trading in the zone, atomic habits, mastering the trade, discipline equals freedom, the dichotomy of leadership by Jocko. The Hour Between Dog and Wolf. This is fantastic. Reminiscences of a Stock Operator, Can't Hurt Me. The Checklist Manifesto by Dr. Atul Gawande. There's Best Loser Wins, of course, by Tom Hugard. There's a lot of really good materials out there. Go through them over and over again. If you're on your 10th listening of Trading in the Zone, when you go back and it's your 20th time, you're going to hear something that you're like, oh my God, is this always in there? This is the first time I'm hearing it because you're different at that time. Yeah, Best Loser Wins is a phenomenal book. When I was listening to it, I felt like I wrote that book myself because there were so many things that, I was thinking that he put down on paper, right? One of the best books out there. It's already a classic. Everybody should be reading that. And then, some of these other books, Can't Hurt Me by David Goggins, tough to listen to, but if you can, great. And these are all available on Audible. I prefer Audible because I can listen to it at, 1 1/4, 1.35 times speed. I can do other things, whether I'm out for a walk, I'm cycling, I'm you know, doing things around the house, whatever. It just makes it really easy, and you don't have to sit there with an actual book. Managing trades, this is always a challenge. There's no right way to trade, but there's a lot of wrong ways, right? Impulse trading, not tracking, reviewing your trades, oversizing, etc. And always do what's best for you and your account. If you are a person that can trade covered calls and make enough money, like make whatever your target is from doing covered calls, then why bother trying to, buy directional options? If all you have to do is be right in terms of distance and time, and you can even be wrong in terms of direction, right? The covered call, then why not, right? Regular options, you have to be right in terms of not only direction, but distance and timing, which is why options trading is difficult, but very rewarding, right? So always do what's best for you and your account. Always. If trading a particular style or a particular setup or a particular time frame isn't working for you, then don't do it. It's just that simple, right? Remember, what is measured can be improved upon. If you don't know what you're doing wrong, how can you fix it? Right? So track and journal your trades, put in the work. You're gonna hear me say that over and over again. I've already touched on this. Well, I'll hurry up because we're kind of over time already. Do I need a lot of money to trade? The answer is, it depends. You don't need to start with 50 grand. There have been people who start working with me and I tell them, you know what? You got 50 grand in your account, start with 1,000. Take the other 49 out, transfer to another account, right? Just don't have it there where you're tempted. And then build your way back up, right? Most of us want to grow our accounts to 6 figures and 7 figures and 8 figures, right? But growing your account to 6 figures doesn't mean that you've made it. You could trade a 10K account and be a phenomenal trader. And if you know what you're doing, you can do a lot with a 10K account, right? Sure, maybe having a 6-figure account is a status symbol or whatever. But if you can't trade a 6-figure account, what is the point in having it? Right? So some traders will struggle with their account balances once they get to a certain point. Happened to me. I listened to John Carter, happened to him. Anybody who tells you that they haven't struggled with a growing account might not be trading real money because everybody struggles. You talk to anybody who's been in the trading trenches, for a long time, and they're all going to tell you the same thing, right? And an easy way to overcome it is, of course, pay yourself. All right. And so you can see how if you just try and double your account, you can go from 1,000 to 1,000,000 in 10 trades, but you're full porting, right? 1 to 2, 2 to 4, 4 to 8. Yeah, okay. 8 to 16, 16 to 32. Oh, hold up, right? 32 to 64. Are you really going to be full porting when you get to this stage? Right? Got to ask yourself. And the people who have done it, right? Let's say that you win 70% of the time. Remember, there's a random distribution. Well, if you lose your first 3 trades or your first 5 trades versus, you make 100%, and if you're an options trader, making 100% return is, I'm not going to say it's easy. I'm going to say it's not that difficult if you pick the right strikes and, maybe you're a little bit more aggressive in terms of, instead of maybe buying 1 strike in the money, you're buying 1 strike out of the money. And instead of buying 30 days, you're buying 15 days and you get a good move. Yeah, you can make 100% pretty quickly. 100, 200, 300. We've seen it. Many of us have done it. But what's the probability, right? This is the whole point. What is the likelihood that you will even do that 100% return on 7 consecutive trades to go from 1,000 to 128,000? It's just not likely, right? 1% per day, starting at 1,000, 232 days later, you're at 10K. If you make 1% per day in, what is that? 365 days a year, so 2 years, little around 2 years, you're looking at 1,000 to 1,000,000, and that's 1% per day. Now, if you started off with 100K and you were making 1% per day, well, look at the numbers. So be very careful what you see out there, especially when you're seeing these huge percentage returns. Sure, it's possible, but if you make 1,000% on a 2-cent contract, right? Would you buy a Happy Meal and a cup of coffee? Got to ask yourself, right? And so break it down into smaller parts, right? If you make just $10 a day, that's an extra $2,500 a year, right? That could be the difference between flying economy and upgrading your ticket to business class, right? That extra 2,500 bucks, depending where you're flying, of course. $50 a day, $100 a day, you're looking at about 25K a year. That's a decent vacation, right? That's just 100 bucks a day. Now, when you start getting into these higher amounts, 500 bucks a day, 1,000 bucks a day, right? If you start stringing together, 4K days, you're looking at 1,000,000 in a year if you average $4,000 a day. Now, some of you right now might think, oh my God, like I would love my account to be $4,000. But if you keep at it and you keep growing slow and steady, managing risk, being disciplined, you'll get to the point where it's like, oh, wow, I made $4,000 last month. And then you can be like, wow, I made $4,000 last week. And you can be like, wow, I made $4,000 yesterday. And then it could eventually get to the point where you're like, oh yeah, I only made 4K on that trade, right? First world problems, as they say. But, break it down into smaller parts. How do you eat an elephant? You eat an elephant one bite at a time, right? So when you see people reporting these 25K days, 100K days, 200K days, whatever, keep that in mind, right? Are they really making that much? There are very few traders out there that are actually making that are posting that. Okay. And remember, keep in mind that the financial markets give us unlimited potential to live the life that many dream of. Maybe you don't want to be a full-time trader. I know some people, they just don't want to be full-time traders. I've been a full-time trader. I can tell you this, it's not what you think. You're not drinking out of a coconut on a beach somewhere. Most full-time traders that I know are usually, and I'm not being stereotypical, this is just based on observation, they're usually middle-aged men who are balding, overweight, have back pain, high blood pressure, and, sciatica. It's not the dream life that you think of. Sure, there's a couple of people out there who, have the Lambo and have the whatever. Most of us are just in the markets to improve our lives and the lives of our families and those around us, right? Many of us enjoy our careers, especially if you do something that you love doing. Why would you give that up, especially if you're making good money? And especially if this is just, a side business for you. And if you want to do this professionally, it is possible, but it's not going to be easy. It's going to take time. And you really have to remember it's a journey, it's a marathon, right? You're not going to make it on one trade. Think about that next 1,000 trades, right? Can you take 5, 10 losing trades in a row right now and be okay with it and come back and still do the same thing over and over again, right? So make sure that you learn and understand what you're doing. Being self-sufficient is the most important thing as a trader. Whenever I've worked with people in the past, I've told you, you know what? I don't want to work with you forever. If we stay in touch after we're done, that's fantastic. But if we don't, I've done my duty, right? I've fulfilled my obligation to you. I've put you on the path that you need to be on, or at least taken you off of the path that you were on that was leading to, destruction. And copying alerts, right? How many people start off copying alerts? We've all done it at some point, right? What happens when those alerts aren't available? Do you even know if the people that are alerting those trades are taking those trades? And do you know if they're taking those trades before they alert it? Because if that's the case, then that might be a problem, right? Or what happens when, you know, groups or companies shut down, people are left high and dry. It's happened. It's happened so many times, right? One of the really big ones, a few years ago was Raging Bull. They had that whole FTC investigation and whatnot. They were shut down, right? And what happens when a key person leaves that business? Many people are left high and dry, right? These alert services go out of business. Exactly. What happens when somebody gets sick and they're not available to, alert whatever? These are things that you really need to consider, because the idea is that you want to be entirely self-sufficient. Because if you are self-sufficient, then you are able to survive on your own. Sure, being part of a community is great, right? Because trading can be very lonely, but you don't want to be reliant on just these alerts. They're great for trade ideas, but you don't want to be reliant on them. And so remember, there's always another trade. You can't take every single trade out there. Remember that proper planning prevents poor performance. If you have a repeatable process, you have predictable outcomes. If you treat it like a hobby, it will pay you like a hobby. Most of our hobbies cost us money. If you treat it like a business, it can pay you like a business. Well, it could be profitable. And of course, as always, believe in yourself. You can be successful. Trading is one of the hardest things to do, right? It's you versus you. It's you versus the market. You've heard the story. I told you, I trained a lady who was a medical doctor. She said that becoming a full-time trader was more difficult than med school. And I had somebody comment and say, oh, well, I don't know how smart that person would have been. Well, my response is that they went through med school. So I imagine, they're probably on the more intelligent side of things. But most importantly, surround yourself with people who genuinely want you to succeed and are willing to teach, right? Remember that you have to be teachable. I'm still learning. If somebody else is presenting, I will still take notes. If there's an aha moment, right? If there's an aha moment, I'm there for it, right? Every edge that you can give yourself is another tool in your trading toolbox. But if you don't know how to use those tools, then it's just that, right? It's like the person who shows up to the basketball court wearing all that fancy equipment, and then you realize that they can't even do a crossover, right? It's the same idea, right? You want to be able to use your edge. And oftentimes you'll find that as you go through this trading journey, you start off adding, right? And then you realize, okay, yeah, okay. Oh, yeah, psychology. Oh, risk management. Okay, yeah. Now you're at the point where you're really starting to be a trader. And then you start realizing, oh, well, I can take this away and I can take this away and I can take this away. And then you get to the point where it's like, I've got hundreds of books. I go through some of them very often. Others are just, collecting dust on the shelf, because I have found what works for me and I continue to exploit that edge over and over and over again, right? And at the end of the day, if you think you can or you think you can't, either way, you're right. So, I only wanted this to be an hour. You guys know me and that I love to talk. We went for an hour and a half. So here's what I'm going to do. I'm going to skip over the market review. I do know that somebody had asked me about the fib retracement, so I do want to make sure that I at least cover that. And then we'll call it a night. So let me just pull up my trading view here. Now, there's a couple of really good books on Fibonacci. Elliott Wave Theory by Prechter is a good one. He talks about fibs. The best one is by the Fib Queen, Carolyn Borodin. That's definitely one that you want to That's definitely one that you want to learn, right? So it's Fibonacci. Of course, I can't find it on my shelf. I'll find the name, but the author is Carolyn Borodin. She's actually with Simpler Trading. She wrote the go-to book on Fibonacci, right? So that's definitely where you want to look. So for me, I don't get too far or too deep into, fib retracements, right? There are some people who love to draw fibs all over the place. Um, they'll draw a fib retracement on pretty much everything and then try and figure out, okay, this is in this zone and this is in this zone. And that's fine if that works for you. I'm at the point now where I'm trying to do as little work as possible when it comes to trading. I want to just be able to look at the screen, say, oh, the background is shaded green. Oh, there's a squeeze. Oh, we're at the 21 EMA. Okay, that's good enough for me, right? However, I do still use fib retracements, right? And so okay, here's a great example, right? So you can see that my setup pretty much always looks the same. I do every once in a while put this time frame continuity back on here, but it has its uses. All right. So when I am looking at fibs, what do I primarily look at? I like to take a fib retracement from the high, the recent swing high, the recent swing low. If we have something smaller like this, you can also do one. But this was the main move, right? And then, if I'm looking to take that trade, depending on where we are, I'll sometimes use that or close below that level as my stop. We want to look at that 50% level. That's very important because once we get past that 50% level and break above that 618, it's very likely that this is going to continue to that recent high. And I love to use them as my extension. So you can see here that, my first profit target here was +2 ATR, which is also kind of this recent high. And then I'm looking at the extensions. And many times, let's see here, NVIDIA was one of them. No, where was it? Was it Mara or Riot? I think I erased a lot of them. Oh, but same idea, right? Just take it from the high to the low, and then you just project it upwards, right? So you can see first target, second target, third target, and what a coincidence, we started to find some support here at this 1618 level. So for me, what do? I pull it from the swing high to the swing low. If you have some, shorter swings, you can also draw fibs on those, and then you can start looking for clusters, right? I don't like my charts to be too messy. As it is, there's already a lot going on. But really it's for the extensions that I'm looking for, especially for an uptrend. If you're trying to look for turning points, then yes, you can look at the 618. That's very common. If you get into things like Elliott wave theory, they get pretty deep into Fibonacci because, there are certain moves and, up in 5 and down in 3 and what's an A wave and what's an impulse wave and zigzag patterns and all sorts of stuff. It does have its merits. I do think that with something like that, it's open to a lot of interpretation. But for the most part, the easiest way that I have found to use fibs is for those extensions, especially if you've had a period of consolidation, right? Here, another great example, right? So this was a trade that we took a while back, and you can see how it just absolutely smoked through that trade. And of course, I sold it here. It continued to go a lot higher, but just swing high to the swing low. I'm sure that if I draw this one here, it's probably going to start lining up. So you can see that the 1272 extension, the 1618 extension, because those moves are pretty similar, right? If we go back to here and we draw fib retracement, right, you can see how this extension became that new support. Right, so the 1618. Our low here was 883, so pretty close. It's never going to be exact. You're looking for zones, you're looking for ranges, you're looking for areas of consolidation. That's really what you're looking for. But, it's not a coincidence that you can see how, we do get to those targets and then price kind of resets itself and that this previous high became support. Right? So hopefully that answers your question. Was there anything else that you wanted to see? Does anybody else have any questions? Okay, well, if you don't, thank you all for attending. This will get posted to YouTube sometime in the next, little while. We'll try and get it up tomorrow or something if we can. But then, maybe I'll check what's going on with everything here at home. Maybe we can do a market review sometime this week, simply because we did have a little bit of a pullback. Now, are we going to see these prices hold, or are we just going to get nuked next week? And there's a lot of earnings. There are a lot of earnings. Probably one of the busiest weeks when it comes to earnings. So there's a lot of things coming up. We've got the Fed coming up as well, if I'm not mistaken. A lot of stuff that's happening. We want to be aware of those because we don't want to be caught in an instance where something happens where, had we been properly prepared, we would not have been caught off guard. But that's it for me. Take care, everyone. Hope you found benefit from this and have a very good night. Bye for now.